Hey, what's going on, everybody? Welcome back to the Land Development Podcast. I'm your host, Ryan Glick. We have a special episode for you today, a little bit off schedule. We usually release on Tuesdays, but we had an opportunity to sit down with Peter Schiff and dig into tariffs, potential housing bubble, and some other really important topics that are very timely. And so since we recorded this, we wanted to get this out as quickly as possible and get it in front of you. So that's why we're releasing this on a different schedule. I had Charles Covey join me on this episode with Peter, so that way we could get as many questions asked as possible and get as much value out of this episode. So if you're not familiar with Peter, he is an investor and the owner of Euro Pacific Asset Management. Hope you enjoy this conversation with Peter and some of the topics that are covered. And don't forget, if you're not already subscribed to the podcast, make sure you click that button and subscribe to us. Otherwise, let's go ahead and get into our conversation with Peter Schiff. All right, so I have to imagine that with everything going on right now, tariffs, economy, inflation, and all that, that you're in pretty high demand. How are you keeping up with everything?
Oh, and it's happening when I'm having some issues with laryngitis and getting over that. But I'm not in enough demand in the mainstream. It's just on like podcasts like you guys. I should be the only person they talk to because I'm the only guy that's gotten this right. Just about everybody on the mainstream financial media, it was like a CNBC. Everything they've predicted has been wrong. Yet everything that I said was going to happen has happened exactly the way I said it would happen. And they're still completely clueless, especially today when, the whole U.S. financial system is really melting down. It's a massive liquidation of U.S. stocks, bonds, and the dollar. One of the worst days in the history of the dollar, down almost 4% at one point against the Swiss franc today. Gold up almost $100 today after being up $100 yesterday. This is really the beginning of the end. We've been a big bubble for a long time, and Donald Trump inadvertently pricked it.
So with all the pulls on your time, I wanted to just touch on personal stuff for a second. Just like, what kind of stuff you got going on this summer? Are you guys traveling a little bit? We got kids sports. What kind of stuff are you and the family into?
Yeah, we're traveling. Although I might have to pull back. I was just thinking that things are going to really get crazy over the summer, and I may not want to be like so remote some of our plans. But yeah, I generally leave Puerto Rico when the kids are out of school, and I come back. So we'll be leaving towards latter May, and we'll come back in the early part of August.
Yeah. How have you enjoyed Puerto Rico so far? Like, do you like that ecosystem?
I love living here. It's a great place to live.
Yeah. So in your estimation, what it took for you to get there, totally worth it? I mean, obviously the tax play is significant, but do you like it in general? You do?
Yeah, it's a great lifestyle apart from the tax breaks, but the tax breaks just make it better, a lot better.
Love it.
All right. Well, let's get into the hot topic of the week. So especially the last 24 hours and everything with tariffs. So yesterday, President Trump put a 90-day pause on most tariffs, setting them at 10%, with the exception of China, which he increased to 125%. Curious, why do you think the Trump administration made this move less than a week after originally implementing the tariffs?
Well, they partially corrected a major mistake, right? They never should have implemented these tariffs. They don't understand tariffs. His chief economists don't know what they're talking about. Tariffs are not taxes on foreign countries. They're taxes on Americans. So we don't tariff China. We tariff American citizens if they want to buy Chinese products, which they do. We buy a lot of Chinese products. And so now if you want to buy Chinese products, you have to pay these high taxes. And so the Trump administration doesn't think that. They think it's external revenue. No, it's internal revenue. It's got nothing to do. China's not paying it. But the taxes the tariffs that they announced, these so-called reciprocal tariffs didn't reciprocate against anything. They were all just made up. But the numbers were so high that they would have almost shut down trade completely with the U.S. And we depend on the rest of the world. See, Donald Trump has the relationship backwards. He thinks that the world's taking advantage of us, but we're taking advantage of the world. We get the better end of the deal. We print money and send it to them. Costs us nothing to print the money, right? They send us goods that they have to produce that are very expensive to produce. You need factories, you need supply chains, you need resources, you need labor. We don't have to
Mhm.
expend any of that. We just get all the stuff for paper. Then when the Chinese get our paper, they just buy our treasury bonds or they buy our stocks, pushes up the stock market, pushes down interest rates. So we get a ride on a global gravy train. We get to live beyond our means. We get to consume without having to produce. We get to borrow without having to save. We get to do all the fun stuff and they get all the hard work, right? That's the apple cart that Trump wants to upset. He wants to get rid of the trade deficits. Okay, now we keep our money and we got nothing to buy and they keep their stuff. Who wins? Who wins in that situation? We lose. We're going to lose our biggest supplier and our banker. So when Trump announced this, he started, everything started to collapse. First the stock market, then the bond market. It was the bond market breaking down that I think caused the about face, because we were on the verge of a financial crisis and they averted it temporarily by pausing. And I would say pause in quotes. They're not going to bring those tariffs back. They've already looked into the abyss and they didn't like what they saw. Donald says, oh, this increased my negotiating status. It took away. I mean, to the extent there was anything to negotiate, and he was going to use the threat of tariffs as some kind of leverage, he's lost that leverage because now the world has saw how much damage tariffs do to our economy. So he's all bluffed now. He's a paper tiger. But the reason the markets are going back down today and the reason the bond market is getting hit is Trump didn't take away all the tariffs. He still has 10% baseline tariffs on everything. That's a 10% tax on Americans, on all the stuff they buy. The China tariff is like 140%, 145, I think they clarified. That basically shuts down trade with China. Well, say goodbye to most of the stuff that we buy, right? It's made over there. There's still the 25% tariffs on goods coming in from Mexico and Canada, plus 25 on autos and auto parts. We're in a major recession, but we've also started a global run on the US dollar. So the dollar is now tanking. And all these experts, you go back a few months ago or even a month ago, and look at what everybody was saying. The dollar is going to go up because the tariffs are going to make the dollar stronger. I said, no, they're going to make the dollar weaker. And that's exactly what's happening. People said that the dollar would go up and that would take away some of the sting of the tariffs. No, the dollar is going down, adding to the sting. So let's say the dollar drops by 10% and we have a 10% tariff. Well, that means everything costs 20% more. We pay 10 because our money goes, we have to pay 10% more dollars to buy something that's made in Europe. And now we have to pay the 10% tariff. But I think what China is doing right now is they are dumping U.S. treasuries and U.S. dollars. That's why the dollar is tanking. That's why treasury bonds are tanking. And they're buying euros. That's why the euro is surging. And they are buying bunds and other European sovereign debt. That is a huge win for Europe because now Europe has somebody to buy their bonds, especially when Germany is doing this fiscal stimulus to build out their military. They need somebody to lend them the money. And now China's like, well, we just so happen to have all this money to lend now because we ain't lending to America anymore. So we'll lend to you. And by buying euros, now the euro goes up. And now all the Europeans have more purchasing power to buy Chinese goods. They're not shipping to America anymore. So we're going to lose out on their credit. We're going to lose out on their goods. And what are we going to do? And it's the whole world. So we just basically, killed what was keeping us alive, right? We were living off the rest of the world. And we just, cut the cord. And so it is a crash, a complete economic crash. We haven't even avoided the financial crisis. But my fear is, I'm not, worried so much about the crisis. I mean, I'm prepared for that. I'm going to make a ton of money off of that. But I wish we had it a long time ago because it would have been a lot less bad than it's going to be. But the problem is that the public is not prepared for it. Trump did not prepare the public for it. He prepared the public for an economic boom. He's going to deliver the greatest of all economic busts. So he's going to get the blame. And so will everything he stands for. And a lot of the things he stands for are the things I stand for. So he's going to give, free market capitalism a bad name, cutting government, all that kind of stuff. And it's going to really empower the left. You're going to have a complete resurrection of the Democratic Party led by the Bernie Sanders wing. And they're going to be saying, you see, capitalism doesn't work. We warned you. So the government has to take over everything, because look at what capitalism did, right? Of course, capitalism got nothing to do with it. And Trump didn't cause the problem. He just pricked the bubble. He didn't inflate the bubble. I mean, he helped while he was president for 4 years. He blew more air into it, but he inherited that bubble. He didn't create it from scratch.
Yeah. Well, the thing that we are wondering, you're talking about the upsetting the proverbial apple cart, and I like that example. But if we take this apple cart and we didn't upset it, what would the solution have been? Let's say we don't do this whole tariff bullshit thing that's been going on. What was the solution that should have been exacted?
Yeah. Well, remember, the tariffs, I mean, the trade deficits that Donald Trump wants to get rid of, the deficits aren't the problem. The deficits are a symptom of the problem. Because we have a problem, we have trade deficits. It's not because of China or anybody else cheating or tariffs. We have deficits because we as a nation don't produce enough and we consume too much. And we do that because we don't save enough. We don't invest enough. We just borrow. Not only do we consume, we borrow to consume. We spend more than we earn. We need to spend less than we earn and save the difference and build the factories that we need. But we don't do that. And we have an enormous government that lives off of credit extended by the rest of the world. So what we need to do is massively cut government spending, not just the Doge stuff, but the big stuff that, is, off the table. The budget that Donald Trump is demanding that the House passed, that's already passed the Senate, increases spending and increases the deficits beyond what it was under Biden. So we're making the actual problem worse. And we're making it so we depend even more on the kindness of the rest of the world, which we're now cutting off, right? So we need real cuts in government spending, including entitlements. We need higher interest rates, not lower interest rates. And Americans have to start saving. We have to stop spending all this money so that we can build the infrastructure that no longer exists. But that means a severe recession. That means lower asset prices. That means bankruptcies. It means defaults. I mean, doing the right thing is going to be painful, which is why we haven't done it. But at least it's constructive pain. What Trump is doing is destructive pain. We're going to have the pain, but it's not going to lead to any gain. It's just going to lead to even worse pain.
Right. They're trying to promise, this is just a hard time to get to some good times, but it doesn't seem like that might actually be the case. And so when that goodwill is going to run out, probably sooner rather than later.
We need hard times to get to good times.
Certainly.
Except the times are going to be a lot harder than people think. And most people don't have the stomach for it. And they're going to look for a politician who promises to make the pain go away. But all that does is make it worse. The recent example of where people finally had enough of failed promises from government politicians who promised to make the pain go away and kept making it worse is Argentina. And they elected Milei. That's what we need. We need a Milei in the White House. Some people think that Donald Trump is Milei. He's not.
Mm-hmm. Yeah. Well, we were kind of thinking, and in talking on our podcast the last couple of weeks, we were thinking, okay, well, maybe the tariffs are just a bluff. It was never intended to be a real thing. And then hopefully nobody would call it and then they would negotiate. It's not playing out that way. Like you said, like we've already given up our negotiating power.
It's like taking a pistol to your own head and says, okay, if you don't do what I want, I'm going to pull the trigger. It's like, right. I mean, what kind of bluff is that?
That's a terrible bluff. So with where we're sitting at this moment, like what we can see it today, like the next couple of quarters, how do you see this shaking out with the tariff thing and then the obvious domino effect of shit that happens?
Well, I think that the dollar is going to keep falling. Interest rates are going to keep rising. The Fed is going to be forced into a corner because we're months away from widespread layoffs. Because when the goods stop coming into the country, the stores got nothing to sell. So they don't need their workers anymore, because there's nobody shopping. So there's going to be lots of layoffs in the country. We're going to be in a severe recession. I mean, I think we're already in the recession. We just haven't had the big job losses yet, but they're coming. And so what is the Fed going to do? The Fed is going to cut rates and go back to QE, except now they're doing it at a time where inflation is already way above target and headed higher. And we don't have Japan and China and Europe to buy our bonds. They're selling our bonds. And so you're throwing gasoline on an inflation fire. So it is stagflation, but not just stagnation, severe recession, and not just inflation, but double-digit inflation. So it's going to be an economic environment that we've never seen. I mean, they're going to be, riding in the streets in protest to what's going on. It's not going to be a pretty picture. What we got in store for us. As I said, Trump opened up a can of worms, has no idea. He's surrounded by clueless advisors. And he's going to get blamed for this by clueless people who don't understand it. I mean, I said it was not easy, but the Republicans finally found a way to make the Democrats look smart. And so they're going to be able to tell people, we told you so, right? Look what happened. You elected Trump. And look what he did. He took this great economy and wrecked it in a matter of months. He didn't wreck it. He pricked the bubble. The economy was never great. But, that's not the story that they're going to tell, right? Oh, that was great under Biden. And it just took a few months, and this crazed lunatic destroyed the whole thing.
Well, so how do you go about then? What's the save? Is there something that could be done to come in and save this scenario? Or do you think the stagflation and the recession is going to have to be bad no matter what? Or is the snowball rolling down the hill already and it's too late?
Well, if by save, do you mean to stop the bubble from popping and delay the day of reckoning?
I don't know if that's even realistic.
I mean, it might.
I don't know. If that's
right.
Realistic.
So let's say Trump wants to try to salvage and get back to the bubble that it was before, right? So we can keep on making the problems worse, and hopefully it blows up on another president, right? If he wants to, do what he did in his first term, right? If he wants to get back to that, I guess what he has to do is drop all the tariffs, quickly, say they're never coming back again. I don't know, declare victory somehow. And say, I don't know. I mean, he's got to undo this damage. The question is, can you undo it? Can you unscramble the egg? Did he already start a process that is irreversible?
Right.
If the question
you now pissed off the rest of the world.
Yeah. If the question is, what do we do to actually solve the problems? Right. That's a different story. But there is no solution that does not involve a lot of pain for a lot of people. And so that's why it's not going to get embraced by any politician. And that is the fatal flaw of democracy.
Well, our American culture has been built on getting more. And so everybody always wants to get more. And so the thing about, you mentioned about saving and about doing those, the American psyche doesn't want that thing. So that's a hard one to change. So how do you go about changing the way that the American mind thinks in order to get back to maybe what was similar to the 1950s or 60s when maybe it was more correct?
Yeah. Look, we got to get people to yearn for more freedom. That's the key to prosperity, is freedom. And freedom is freedom from government. Yeah. So we got to start dismantling a lot of government. And that's what we have to do. Elon Musk, I think, is a libertarian now. I think if you look at the stuff he posts on X, I think he gets it. We need more guys like that. But we need to actually implement the policies and level with the American public about the nature of the problem and how we have to all come together and suck it up. And it means that, everybody is going to take a big reduction in their standard of living. And, we have to pay the piper for, a couple of generations of monetary and fiscal excess. We've been sold a bill of goods by both parties. And we need to accept that and acknowledge that and stop trying to blame other people for our problems. We created our problems, and only we can solve our problems.
This will be the last thing on the tariffs, and Ryan's going to talk about some economic cycle stuff that I think you'll like. But if you're trying to convince the American public to yearn for freedom versus yearning for stuff, how does one even go about that? Because we seem to always want more stuff versus the freedom.
Right. But the way to get more stuff is freedom, freedom to pursue happiness and pursue your wealth. But what people don't want is necessarily stuff. They want free stuff. They don't want freedom. They want free stuff. But the government isn't some horn of plenty that could just dole out free stuff. It's not Santa Claus with a magic bag of stuff. So the government only gets stuff if it takes it from somebody else. But when the government takes stuff from other people, it destroys their incentive to produce the stuff. So we end up with a smaller pie that the government is trying to distribute. And so it's counterproductive. What we want is the government to leave, right? There's nothing so expensive as a government free lunch, right? The government runs up the cost. People don't realize it, right? The government gives you money with its right hand, but it takes it out of your back pocket with its left hand, right? You don't realize what's going on. Government doesn't help anybody, but people want something for nothing. That's human nature, you know. So we have a system that protected us from that for a long time. We were a republic. People didn't go out and vote, and that protected us. Now we got every idiot voting, and they're voting for socialism. They're voting for government institutionalized theft, and it's led us to where we are.
This episode of the Land Development Podcast is brought to you by Groove. If you're still jumping between spreadsheets, shared folders, and maps to manage your land deals, it's time for something better. Groove brings your entire land acquisition and deal management process into one platform. Prospect parcels, store notes and documents, track activity, and manage every deal on a centralized map built for teams or solo operators alike. Start your free trial today at letsgroove.com/signup. That's LETSGROOV.com/signup. All right, let's get back to the show. Yeah, sorry, I have one quick thing I want to clarify here. So earlier you had mentioned the U.S. printing of money and sending it overseas. Do you consider that to be the cost of, the tariffs that are imposed on the U.S. From all of these other countries? Is it essentially like that's the swap? Like they allow us to continue to send our dollar and we continue to print money, and then that's why we allow them to get away with having the tariffs on the U.S.?
They don't have tariffs on the U.S. That's the point. I mean, the tariffs are small.
Okay.
Most of the stuff that we export to other countries isn't tariffed. It's mainly agriculture. But we have lots of tariffs on our agriculture. We keep foreign agriculture out. But yeah, I mean, there are selective tariffs that countries have, and they harm those countries more than they harm us. Just like our tariffs harm our people more than they do our trading partners. But by and large, American manufactured goods are not being sold in China because of tariffs. They're not being sold in China because we don't make them. We don't have the factories. That's the reason that we're not selling a bunch of stuff in China. We don't make the stuff. That's why Americans are buying all the stuff from China. If we made it here, we could buy it here, but we don't. So this is a canard. It's talking about tariffs and trade is how we blame the world for our problems. But that's part of Donald Trump's populist message, that the world has been screwed over because we haven't had a strong president who would stand up and fight for America. And he's the only president that's willing to do it. He is not going to take it anymore. We're going to fight back. We're going to kick some ass. And Donald Trump, the guy who dodges bullets, he's the one that's going to kick ass for America, right? And that's what people want. That's his persona.
It does resonate.
Yeah.
But it's not true. He can't kick ass because we don't have the cards, right? He doesn't understand what we're holding, or the nature of this relationship. But blaming other people for our problems gets more votes than telling the voters it's your fault. You're the reason that we have these problems. No, let's blame the evil Chinese. We create this external boogeyman that we can all rally around, and he's our champion. He's going to go get this boogeyman, right? The China, right? That's what that you do. You have to manufacture an enemy so you can lead the fight against that enemy, and it distracts you from the real problem.
Context we didn't give you, Peter, in the beginning. So the listeners on our podcast control give or take half of the nation's lot and home supply. So these are land developers, builders, large merchant builders. And so it's really fascinating that our our listenership is not giant in the millions, but they control a lot of what goes on in the housing market. So really, really fascinating. And I think they're going to be really interested in what you have to say. So just kind of think about that as the listener audience, as you're framing answers.
Well, let's get into that, because first of all, what a lot of you guys should do that are in real estate is go on YouTube and look at my mortgage banker speech from 2006. So just type in Peter Schiff mortgage bankers. Okay. And I was there to promote my hedge fund to short the subprime mortgage market. Now, I went and I spoke at that conference a year earlier in 2005, which was actually the peak of the residential real estate bubble. And I was the only bear on the panel saying that, this is a bubble, real estate's going to go down. And a year later, the cracks were starting to show. And so they said, hey, it looks like you were kind of right. Things are, can you come back to the conference? And I said, well, I'll come back, but you got to let me have a workshop, because I got this hedge fund. We're shorting subprime mortgages. I want to try to get investors to come into my fund. And I thought that mortgage bankers, might want to put a little on the don't pass line. We were in Vegas, and I was like, hey, you've got your whole, living riding on the real estate market and a real estate bubble. Right. What if it pops? Don't you want to have an investment that could pay off if your main business goes to hell?
A hedge of sorts.
Right. So I come down there and I give my presentation, and I predicted the entire implosion of the subprime market, the housing market, the bankruptcy of Fannie and Freddie. I told the whole audience that in a few years, most of you guys are going to be out of work. I just explained the whole nature of the real estate bubble and the mortgage bubble and how it worked and how it was inflated and how it was going to pop. And pretty much everything happened exactly the way I said. Now, about 100 people, maybe not 50 to 100 people, went to my workshop. One person sent me $500,000. A year later, I sent him back about $5 million, right, on his investment. So he made 10x his money.
Good for him.
So what's going to happen in real estate now is going to be horrific in commercial real estate. All right. So here's what's going to happen. Right. And if you own property, you could figure out what you're going to do, because I don't have a fund for you to invest in other than maybe buy, I think gold stocks can go up more than 10x. So that's something you could do, because gold stocks do really well in stagflation. But so there are two types of real estate that are going to get obliterated: retail and commercial office. All right. So one of the malinvestments we have is we have too much retail capacity in this country. Mm-hmm. Too many shopping centers and strip malls and stuff like that. And they've already been under pressure by the online merchants, right? Two things are going to happen to decimate commercial real estate. One, their revenues are going to collapse, because Americans are going to stop shopping, because all the imports are going to be so much more expensive. You can't afford them anymore. So retail sales are going to go over a cliff. And so they're not going to have money to pay their rent. And some of the rents are even tied to sales, right? So, so rents are going to collapse. At the same time, credit is drying up. And so interest rates are really rising. And so, if you have debt on your commercial property and you got to roll it over every 5 years, and right now you're financed at 6 or 7%, and the bank is like, well, now it's 10%, 12%, and most of your income, or maybe all of your income, is gone. What the hell is that property worth? I mean, you're going to see a record amount of defaults and banks becoming the owners of empty retail space. Right? What are they going to do with it? Right? I mean, the banks are going to fail too, right? I mean, all of our banks are insolvent, even the big banks, because the one thing that was never stress tested by the Fed was stagflation. Every adverse scenario that they ever test, where they assume a recession, they assume that interest rates go down during the recession. They've never run a model where we have a recession and interest rates go up, because they assume that's impossible, right? But that's exactly what's going to happen. And so that decimates. Now, office space is going to be the same thing, because a lot of these service sector jobs depend on the imports of manufactured goods. and you pull the rug out from under the service sector, it collapses. The reason we can have all these service sector jobs is because we don't have to manufacture. But the minute we no longer have access to those goods, right, the service sector that was built on that, implodes. So you have a lot of empty commercial office space. We're the same problem where rising interest rates. And so, what type of real estate will do well? Farmland, industrial land. There's an old factory that you can somehow, refurbish or whatever, but more industrial property and farmland and something you can mine, right? Because if we're not going to import a lot of foreign raw materials, we're going to have to start digging it up ourselves. So, some types of real estate will do better than others. But there's going to be a lot of losses in real estate. Real estate's, has been a bubble propped up by artificially low interest rates. Well, that's going away. And cheap consumer goods, that's going away too. So, it's going to be very, very difficult. And one of the things that's going to hurt residential real estate, first, the one thing that's helping residential real estate is that a lot of people have locked in low rates a few years ago. So you got a lot of people with, 3.5%, 4% mortgages, 5% mortgages. So to the extent that they can pay those mortgages, they're not going to leave their homes, which is actually bad news for the banks because the banks are losing money on those mortgages because rates are going to be way up and they're going to be paying more for the money than they're getting from their people who borrowed from them. So they're upside down. But for multifamily and rental units too, rents, I think, are actually going to be one of the prices that might come down. Why are rents going to come down? Because people won't have the money to pay rent. That's why. And so what happens when people can't afford to rent an apartment? They live with their parents. They live with their kids. They live with roommates. So what we're going to have is a lot of pressure on rents because families are going to start doubling up and tripling up in the same residence. Now, if we still have the immigration where we're keeping out the illegals, now we don't have those guys looking for a place to live either, right? So you could see a big decline in demand for housing because so many people are living under the same roof. Now, there's not going to be any new construction, so that might help. But all the construction, because the raw material costs are going to be way too expensive because of the collapsing dollar. So it's going to be too expensive to build homes. You could build homes for a billionaire, right? He'll be a lot poorer, but he can still afford a house. But entry-level homes, that market's going to be completely gone. So the only housing stock we're going to have is the housing stock we got, right? We're not going to be constructing more stuff because we're not going to be able to afford it. But it's a major, realignment of this. One of the ways that you can hedge against it, of course, is to have some money in my investment strategies, which do really well. Maybe I'm totally wrong. Okay, so you won't clean up in my investment strategy, but you won't go broke in real estate. But if I'm right, like I was about the 2008 financial crisis, maybe I can make you 10 extra money or more. And, you'll have something to fall back on. You'll have a hedge, right?
That was basically, you kind of dug into the first thing that we were going to get into here around how you correctly predicted the 2007, 2008 bubble. And so really, as you were talking about what we're heading toward right now, what are you thinking like timeline wise? And, we just talked about tariffs and some of that happening, but because we are seeing construction happen in the industry. We're seeing new developments go up and in certain markets and everything like that. So I'm sure there has to be a string of events that take place before some of that stuff starts to slow down. And
the tariffs have to go into effect. They just started. And remember, the stuff that's already in the country that we already imported, that escaped the tariffs. And we imported a lot of stuff. Our trade deficit skyrocketed the last few months, all-time record highs, like massive. So there was a lot of tariff front running. So we have to work through that inventory, right? And before the tariffs come into play. And then the price increases and the weak dollar. So it takes a little time. But what makes this so much worse than the '08 crisis? The '08 crisis was really a mortgage crisis. And really like a subprime and a low credit, not all the mortgages were in trouble, just enough of them to bust the system because we were so levered. So the government was able to step up and bail everybody out because the government was able to buy up all the toxic paper and issue paper of its own. And everybody's like, oh, we'll trade underwater subprime mortgages for U.S. treasuries. Okay. And so, the government bailed everybody out, bailed out the banks, bailed out insurance companies, everybody. Well, this is not a mortgage or subprime crisis. This is going to be a U.S. Treasury crisis, right? Where it's Treasury bonds themselves that are the epicenter of the crisis. And of course, if Treasury prices are crashing and the Treasuries are the risk-free rate, they take everything down with it. All the corporate bonds, all the muni bonds, everything crashes along with Treasuries. And if Treasuries are crashing because no one wants to buy Treasuries, then the Treasury can't bail anybody else out because its credit's no good either. So this is a financial crisis from which there is no escape. There is no bailout. Now, had we not had bailouts in 2008, the crisis would have been a lot worse. But we would not be in this mess we are today. We would have cleaned house back then. Yes, it would have been a big shakeout. We would have had more bankruptcies, more failures, but we may have reset the system. Instead, we simply preserved a bad system and made it worse. And everything that I was worried about leading up to 2008 that led me to understand that crisis was coming. And there are people who said, hey, I watched your mortgage banker's speech. People don't even believe that I did it in 2006. They think, well, you must have recorded that in 2009, 2000. I mean, how else would you know? Did you have a time machine? No, I just understood economics. Yeah. I didn't need a time machine, right? And so had we done the right thing, we'd be okay. But because we did the wrong thing, all those problems that led me to accurately forecast the 2008 crisis are so much worse now than they were. And by the way, I nailed the inflation after COVID. In March of 2020, when everybody was saying, oh, this is deflation, I said then that the Fed had just unleashed the most inflationary monetary and fiscal policy combination I'd ever seen. And I predicted inflation. And when the Fed was saying it was transitory, I said they're wrong. So when the Fed said subprime was contained, I said, no, it's the tip of a huge iceberg and we're going to have a financial crisis. When they said inflation was transitory, I said, no, inflation is not transitory. It's going way up. And then when Powell a year ago said, I see no sign of stagflation, I said, he's blind. I said, it's stag everywhere in inflation. And so the Fed is constantly wrong and I'm constantly right because I understand what the Fed doesn't. Now, it's possible the Fed understands it and they're just lying. But if they were lying then, they're lying now. I always tell the truth.
Yeah. Well, to your exact point there with the inflation. So what we saw post 2020 is we saw, especially land and real estate prices, and land specifically, because that affects a lot of the developments that our listeners are working on. Land goes up to the moon, and land tends to have a very sticky pricing structure to where it's, even though it needs to come back down, it doesn't. And so we're kind of seeing that, the stickiness of the price. How do it's separated from the intrinsic value. Maybe something like what's coming is going to fix that. But what does that correction look like? How do you fix that, the stickiness of that real estate pricing, and how do you get it to come back down?
Look, I think where people will make money in real estate is on their debt. So like if you have a fixed rate debt, like, yeah, you're a homeowner and you have a mortgage, inflation is going to wipe it out. But you won't have any resources to fix the house when something breaks because it'll be too expensive. You may not be able to run your heat or your air conditioning because it's going to be too expensive, but at least you'll own the house free and clear. Although the government might jack up your property taxes because they're broke too. I think we're going to see a lot of muni bond defaults too, because they're going to lose all their tax revenue and then interest rates are going to go up. And so, the municipalities are going to default. But, again, if the government creates enough inflation and we have hyperinflation, then you don't have to default. But the creditors are wiped out because they get paid back in money that has no value. That's why I've been telling people for years, don't put your money in the bank because you're guaranteed to lose. Either your bank is going to fail and you're going to lose your money, or the government is going to prevent the bank from failing by printing money and your money is going to lose its purchasing power. So either way, you're a loser. So I've been telling people, buy gold. And where's gold now? They're almost $3,200 an ounce. I'm telling people to buy it since below 300. It's actually beaten the S&P by a wide margin over the past 25 years. Just holding a piece of metal in your hand is a better return then the stock market is even beating Warren Buffett's Berkshire Hathaway. You'd be better off buying an ounce of gold than buying, a $300 worth of Berkshire Hathaway stock. Although you couldn't buy that little bit back then. But the key now is to buy the gold mining stocks, though. That's that you want to do the 10 bagger, 50 bagger, 100 bagger. You've got an opportunity right now in these gold mining stocks. I mean, my gold fund, I think, is going to crush it. The Euro Pacific Gold Fund, EPGIX is the symbol, and you could buy it any discount broker. You could buy it directly from my website too at Europac.com. But if you got more money too, we have separately managed accounts in gold stocks. But these gold stocks aren't even priced for 2,000 gold, let alone 3,000. You have a once in a lifetime buying opportunity. These stocks are at 52-week highs today, but they should be triple where they're already trading. They should be a lot higher. I'm confident they will be. I got half my portfolio in these stocks. Most people have none of their portfolio in these stocks. And that's the opportunity. It's so underinvested. Wait till the crowd figures it out.
So you're very bullish on gold and gold mining. In any other metals, like you think
Yes.
silver directly correlative or not?
Well, silver is going to go up a lot too. The reason that silver is still so cheap, it's the cheapest it's ever been in history relative to gold.
Relative to gold, yeah.
I mean, we're almost at 100 to 1. This is uncharted territory. In fact, it may be 100 to 1 today. I got to check the math. Because silver is only around 31 and gold is, it may be there. I'm going to check it. It may be 100 to 1. But
So do you think silver may actually be better value?
It is a better value, but it may, I don't know when it's going to turn. It will. But the best value is the gold and silver mining stock. So I would buy mining stocks over silver or gold because you still get the gold and silver. It's just still in the ground, but they're going to get it out. They're going to sell it. But it's mainly been central banks. Central banks aren't buying silver. It's too bulky. They buy gold. And they're not buying gold mining stocks. That's the public buys that. And the public is oblivious. They've been buying tech stocks. They've been buying cryptocurrencies. They're buying Bitcoin. They don't know what the hell they're doing, right? They're missing out on this opportunity. But they'll figure it out sooner than later. And then it's going to go to the moon.
So on the topic of inflation, so Trump posted a graphic this morning on Truth Social, as well as his Instagram, that essentially showed the 2.4% inflation in the month of March, and essentially celebrating that it was less than expected. What do you think of where inflation is at today? And is that the real number? Is that what's inflation look like?
It is 100 to 1, by the way.
Okay.
Oh, look,
nice.
That is one number. It's got nothing to do with Trump. Oil came down recently because of a global economics slowdown, right? Nothing. He didn't do anything, but it's 1 month. It means nothing. It's February. Was it a February number or March?
March, yeah.
Yeah, he's only been president. He'd only been president for a month and a half. There's none of his policies that had a chance to really take hold, right? So they say, "Oh, look, I'm doing a great job. Look at this inflation report." That's all misdirection. It's meaningless. And that whole report was before the tariffs and before the dollar tanked. So the only thing he's got going is the oil prices come down, but it's not going to stay down.
We want to talk a little bit about, I know your position on fiat in general, and want to talk a little bit about, based on what's happening and the geopolitical climate, what do you think? The dollar's obviously not looking good.
No, it's in fact, it's never looked worse. It's about to go over the edge of a cliff. And Trump wants to get rid of the trade deficit. A weak dollar will do it because Americans will be too poor to afford to buy anything.
So do you see a future of other currencies becoming dramatically more powerful on the global stage and the dollar weakening to the point that it's a second or third or fourth choice?
Look, it's not going to be the reserve currency. It's going to be a currency, but it's not going to be the reserve currency. But I think what's going to take its place is gold. But I do think that the euro is going to, for a while anyway, play a much bigger factor, certainly on China's balance sheet. And maybe some other countries that were not, vilifying and threatening.
I know a lot of the other countries have been buying gold at a big clip. what does that look like for the average person to come in and invest? Is there a point where that they stop buying as much gold, or do you think there's going to be a continued desire for governments to hoard gold?
No, the demand for gold is going to continue to rise because we're de-dollarizing. And what are you going to own when you sell your dollars? Gold is hands down the pristine reserve asset. It's the gold standard of reserves, right? So you want to own gold. And the gold price is going to keep rising. The only thing that's going to change is eventually it's going to start rising faster. But right now, with oil prices as low as they are, you've never had oil so high. I said, silver is at a record low in terms of gold. So is oil, right? And so that's great for gold mining companies because their biggest cost is energy and their cost is plunging and the product they sell is skyrocketing and it's not affected by the tariffs. So, I mean, it's just going to be bought up. These companies are making a pile of money. And, I'm getting my share because I own stock in these companies.
I imagine the spending bill that the tax cut bill that's going through right now and everything with the additional increase that it's going to add to the deficit. I mean, is that essentially going to just cause additional inflation on top of that? I mean, is there additional money printing that's going to be going on as a part of that bill?
Yeah, look, the bill is an inflationary bill. It's, they increased the debt ceiling by $5 trillion. That's the biggest dollar increase in the debt limit in history. And it's the Republicans that are jamming it through Congress and a Republican president who can't wait to sign it. So it's an inflationary budget. If I were Trump, I would never sign that budget. In fact, I would make it clear that I won't sign any budget that's not balanced. And I would say that if you're going to try to raise the debt ceiling, I will veto any bill to raise the debt ceiling. And I would force Congress to raise the debt ceiling over my veto. And if I can prevent it, well, then we could get down to the business of finally balancing the books. Look, the government has $5 trillion of revenue or about. It spends $7 trillion. All right, make do with the $5 trillion. That's it. That's what we got. Right? That's how much money we got. And so let's budget what we got, not what we want. And we just have to live within our means.
Yeah.
But it means a lot of cutting. But you know what? The budget, $5 trillion was the budget not too many years ago. That was all the government spent. The spending, I mean, if we could just go back to what we spent pre-COVID, that would get rid of a lot of the deficit. It's the same country. Why do we have to spend all this money now? We weren't spending it back then. Get rid of it all.
Yeah.
The problem now is we're spending $1.3 trillion a year on interest, and that's about to go up. By next year, we'll be spending $2 trillion a year on interest on the debt. That is the elephant in the room right now. So unless we're willing to default on the debt, which may be our best option, it's really, really hard to cut spending when you take interest on the debt off the table.
Yeah. Well, Peter, we just have a few more questions for you here, and then we can wrap up. But the next section is really just about the government policies and with respect to like the housing market. And so I'm curious from your standpoint, like what specific policy changes should be pursued at the federal level to create the strongest possible housing market?
Well, we need to get the government completely out of housing. So no more FHA, no more Fannie and Freddie. I mean, they're talking about reprivatizing them. They should shut them down. No more government insured loans, guaranteed loans. People have to buy real estate because they can afford it. They have to be able to convince a bank to loan them money based on their own creditworthiness, their own ability to repay the mortgage without a government cosigner. And of course, that's going to completely upend the market, but that's what we need to do. And the initial result of that would be much lower housing prices. But that's good because we need lower housing prices so people don't need to borrow so much money. The reason they need government guarantees is because the mortgages are so big. The mortgages are so big because that real estate is overpriced. So let the mortgages go down and people have to put 20% down, right? I mean, because without the government backstopping the loans, banks are going to want a down payment. And you don't want to let someone buy a house who can't save up a down payment. How are they going to be homeowners if they can't save? Because homes are
Yep.
expensive. You got to pay for repairs. If you can't save up a down payment, then you have no business owning a home. You need to rent. So your landlord can take care of those problems for you, right? So, but the government has taken all the responsibility out of the housing market and made a gigantic bubble. And so we got to get the government out. Just like, what did they do to education? Why is college so expensive now? Because the government subsidizes it. They loan all this money to kids or guaranteed loans. So you can overpay for a worthless degree. If you had to pay your own money, you wouldn't buy a worthless degree. They couldn't sell worthless degrees because there'd be no market for them. But the government has created a market for worthless college degrees. So we got all these college grads that have degrees in nothing. Mickey Mouse subjects that have no value in the marketplace. People that barely could get through high school have college degrees now. People go to college and they have to take remedial math and remedial English. What are they doing in college? The government is getting everybody into college by subsidizing it. And so college is way more expensive than it should be. So you got to get the government out of college. No more student loans to anybody, period. No guaranteed loans, no direct loans. No, and let this whole, education complex that we've created collapse, because college didn't used to be expensive. We, the government, made it expensive, not capitalism. If we had free market capitalism, college would be so cheap right now. It'd be way cheaper than it was 50 years ago or 100 years ago, instead of way more expensive. I mean, adjusted for inflation. So we need a free market in education. We need a free market in housing. We need a free market in healthcare. Got to get the government out of healthcare. They've done the same thing with healthcare. Why do you think healthcare is so expensive? Look, the stuff that works is where the government stays out. And you can even see that in areas where the government is. Like, look at healthcare. Where is the government not involved? Cosmetic surgery, right? You can't get a government loan. You can't get insurance, government. So prices for cosmetic surgery come down, so more people can afford it. Eye LASIK surgery is a lot cheaper now than it was years ago because the government didn't pay for that. So anytime the government stays out and you let the free market come in, quality goes up and price goes down. Look at consumer electronics. Why are cell phones getting cheaper all the time? Why are computers and television sets? Because the government's not involved in that market. They let capitalism work. If government was involved, then it would be the opposite, right? A cell phone would be like college. It would go up every year and be worse every year.
Yeah. Well, going back to what you said a second ago about getting the federal government out of housing, and I think we can agree that there's a lot of benefit to doing that. Fannie and Freddie, get rid of those. On a state level, states have the ability, whether it's through entitlements and all the red tape that happens through the development process. What do you think on a state level does make sense, and what involvement you think is actually productive?
Well, again, all governments have to do is get out of the way, because salvation lies in capitalism and freedom. And so government just erects barriers to the progress that people would make on their own. So we just need government to be as small as possible. And so states, whatever they're doing to inhibit freedom, they should get rid of it, whether it's, permitting processes that make it harder to build, or occupational licensing laws that make it harder or even impossible for people to work. And a lot of the labor laws that make it so that nobody wants to hire because it's too risky. We've turned employers into public enemy number one. We've made it so easy to sue your boss that a lot of people don't even want to hire anybody because they don't want to get sued. And so as a defense, they don't hire, they outsource, right? So we got to stop, sabotaging ourselves.
Yeah, no, I really appreciate it. I think that's a good spot for us to wrap up. And I think before we end, Peter, just give you another chance to share anything else related to your company and what you're offering to the listeners.
Yeah, I run an asset management company. We have separately managed accounts and mutual funds. People should call us up now. And I sell gold and silver too, physical. But as I said, right now, that's not what you should buy. You should buy that later with your profits from the mining stocks. I'd buy gold in the ground right now because it's so cheap. That's what I'm doing personally. I'm buying more gold stocks. I'm not buying more physical. And so we can work that for you at my company, Europe Pacific Asset Management. Get information on my funds and my separately managed accounts. We also have non-gold strategies. I mean, my core value strategy is up about maybe 13, 14% year to date. And it's not short anything. I'm just long. Now, the U.S. markets are getting killed this year, and I have double-digit returns already. And we barely finished the first quarter because we own the good stuff. We don't own the stuff everybody's getting rid of. We own the stuff that people are buying, and they're going to keep buying it, I think, for a long time. So make sure to reach out to us. Follow me on social media. Follow me on X. I've got over 1 million followers now, but I'm constantly putting out information that's accurate. You get inaccurate information from the mainstream media on both sides. The left is putting out Democrat propaganda. So on CNN, CBS, MSNBC, then you go to Fox or Newsmax and you get Republican propaganda. No one's giving you the truth. No one's telling you what's actually happening. So you got to get that from a source like me. So read my X account and listen to my podcasts. I do, 1 or 2 a week at schiffradio.com or on my YouTube channel. So just go there and listen to what I'm saying. And I got a free newsletter at schiffsovereign.com. I put out maybe three issues a week. It's free. Sign up. Just give me your email address and I'll start sending them to you. But then you'll get the real story. Then you know what's actually going on, not some political spin on what's going on.
Yeah, I know for me, this is really enlightening. So I appreciate your willingness to just call it how it is and not try to put the spin on it. We just get too much of that. So I appreciate your perspective. And I think our listeners are going to really enjoy it.
All right. Take care, guys.
Absolutely. Appreciate it, Peter.
Thanks, Peter.
All right.